Welcome back to the deep dive. Today we are opening up the hood of the corporate machine. You know, usually when people think about finance, they think about the output.
Right, the reports.
Exactly. The quarterly report, the expense claim, the P&L. We're all obsessed with the bottom line, but today we're looking at the input, the actual nervous system that makes all of that possible.
It's the invisible architecture. I mean, most people just assume the numbers live in the computer by magic. You swipe a card, you send an invoice, and the numbers just sort of appear. But someone has to build the house where those numbers live. And if that house is built on a shaky foundation, the whole thing comes tumbling down.
And that is exactly what we are tackling. We're decoding the setup of the general ledger, the GL in Oracle Financials Cloud. And to do this, we are working from a very specific hands-on implementation document.
Yeah, it's called Setting Up General Ledger in Oracle FI in Cloud. It's basically a step-by-step guide.
It really is. It takes us from a completely blank screen to a fully functioning financial brain.
And it's a really solid document because it treats the setup like a logic puzzle. It walks through a case study. They call it the AMD project. And what strikes me is how linear it is. You realize you can't just jump in and start, processing invoices.
Right.
You have to lay the foundation first. It's like building a skyscraper. You don't start with the penthouse drapes. You start with the steel beams.
Exactly. And speaking of the foundation, I have to point out this one detail in the source screenshots that made me laugh. The user they used, the person clicking the buttons in the guide.
Oh, I know what you're going to say.
Her name is Sarah Connor.
I saw that.
Yeah.
I guess even in the future, when you're fighting machines, someone still has to configure the chart of accounts.
Saving the world, one journal entry at a time. So let's picture the scene. Sarah is logged in. She's in the implementation project screen. The project is created, but it's a ghost town. Nothing is set up. Where do we actually begin? What's the first piece?
Well, if you think of the general ledger as a language the company speaks, you have to define the words first before you can write a sentence. In Oracle speak, we call these value sets.
Value sets. Okay, let's dig into that because in the guide, this is the very first task. Why start here? Why not just start, building the accounts themselves?
Because you need the buckets first. You aren't deciding what the specific accounts are yet. You're not listing cash or office supplies. You're just deciding the shape of the data.
The shape?
Yeah, you're telling the system, I'm going to have a list of companies and that list will look like this. Or I'm going to have a list of accounts and they need to be formatted like that. It's all about the container, not the content.
Okay, so looking at the navigation path in the source, we're going to financials, then define common applications configuration, and finally define enterprise structures. Feels like we are deep in the basement of the settings here.
We are. This is the plumbing. If this isn't right, the water doesn't flow.
And in this AMD project case study, they define 3 specific value sets to get started. AMD company, AMD division, and AMD account.
Right, and this is where the details in the guide get really crucial. If you look at the configuration screen for these, there are settings that you can't get them wrong. First, the module is set to general ledger. That's pretty standard. But look at the validation type.
It's set to independent.
And that is key. Independent means the list of values just stands on its own. It's not dependent on another list. For example, sometimes you might have a list of cities that depends on which state you picked.
Ah, okay.
That would be dependent. But for your core financial structure company, division, account, you want them to be independent. You don't want your list of accounts to change just because you switch divisions. Cash is cash, whether you were in marketing or IT.
That makes perfect sense. Keep it simple. I also noticed the guide is really specific about the length of these values. The AMD company value set is set to a maximum length of 2, just 2 characters.
Short and sweet. You want your company codes to be things like O1 or US or UK. You don't want people typing out United States subsidiary every time they book a transaction.
It forces discipline.
Exactly. The shorter the code, the faster the data entry, and the cleaner the reports look.
Then AMD division gets a length of 3, but AMD account, which I'm guessing is the big one, gets a length of 5.
Right, because you need granularity there. The account segment holds everything. Assets, liabilities, revenue, expenses. You might have thousands of these. So you need those 5 digits, like a 10,000 for cash, 50,000 for revenue, to categorize everything properly. If you only made it 3 digits, you'd run out of room pretty fast.
So just to be clear, at this stage, we haven't actually created the account cash yet. We haven't told the system that 10,000 means anything.
No.
We've just told the system, hey, when we do create an account, it's going to be a number and it's going to be 5 digits long.
Precisely. You're setting the rules of the road before you even buy the car.
Okay, so we have our 3 buckets. We hit save and close. Now we have these value sets just floating around in the system. We need to actually stick them together. This leads us to the next big segment, the chart of accounts structure.
This is the skeleton. We're taking those buckets and hanging them on a framework so the system knows how they relate to each other.
The navigation shifts here. We're searching for a task called Manage Chart of Account Structures, and the guide says to select General Ledger as the module again, but then we run into a term that I think scares a lot of people, the key flex field.
It sounds like sci-fi tech, doesn't it? Engage the key flex field.
It really does. It sounds like something Sarah Connor would have to destroy. What exactly is a key flex field in plain English?
It's legacy Oracle terminology, but it's still the beating heart of the system. Think of a flex field as a container that can stretch. It's flexible to hold whatever information you want. The General Ledger flex field, or GL Shack, is the engine that powers the accounting string. It's what lets one company say, we track department and projects, while another says, we track fund and object. The flex field is the tool that lets you build that custom string. It's the blank canvas.
Okay, so Sarah Connor finds the GL Shack flex field and she creates a new structure. She adds our 3 segments, company, division, account. But it's not enough to just add them to a list, right? The guide spends a lot of time on something called segment labels.
This is, and I'm not exaggerating, this is the most critical step in the entire setup. If you get the labels wrong, your ledger is essentially broken. The system needs to know which segment is which, logically.
So let's run through the assignments in the A&B project. For the company segment, the guide selects the primary balancing segment label. That sounds important.
It's vital. The primary balancing segment is the anchor. In accounting, debits must always equal credits. We all know that. So this label tells the system, debits must equal credits specifically within this segment. So if you have company O1 and company O2, the system ensures that company O1 balances within itself. It stops you from accidentally paying company O1's electric bill with company O2's cash without the system catching it.
Keeps the books clean. Okay, next is division. The guide assigns the cost center segment label.
Yeah, that's pretty standard. It's the who spent the money, marketing, IT, sales. That's your cost center.
And finally, for the account segment, the label is natural account segment.
That's the what? What is this transaction? A salary? A computer? A tax payment?
Yeah.
The natural account determines the nature of the transaction and crucially whether it resets at the end of the year like revenue or carries forward like cash. If you don't tag this segment, the system doesn't know how to close your books.
So we've built the structure, we've mapped the labels, we hit save, but then the guide throws a curveball. We're done with the structure, but now we have to create a structure instance.
This trips people up all the time. It feels redundant.
I was confused reading it. We just made a structure. Why do I need an instance? Is it just a copy?
Think of the structure as the blueprint for a house. It says, this house has 3 rooms, company, division, account. It defines the shape. The instance is the actual house built on a specific plot of land. The blueprint is the design. The instance is where you apply specific behaviors for your implementation.
Okay, that clarifies it. And looking at the source, there's a very specific behavior you set at the instance level.
The required checkbox.
Yes. The guide explicitly shows Sarah editing the instance, going into each segment, and checking a box that says X required. Why is that so important?
Imagine if you didn't check that. The system might let a user post a $1 million transaction without a company code.
So, where would the money go?
Nowhere. It would be orphan data. It wouldn't show up on Company A's balance sheet or Company B's. It's a financial black hole. By checking required at the instance level, you're forcing the system to say, I will not accept this transaction unless every single box is filled out.
It's the enforcer.
Exactly. The structure provides the slots. The instance enforces the rules.
Sarah checks all the required boxes, saves it. So we have the buckets, we have the skeleton, we have the rules. Are we ready to go?
Not yet. We've built the car, but we haven't turned the ignition key. We need to deploy.
This is segment 3, the go live moment. The guide takes us to a screen with a big button labeled Deploy Flex Field. It feels dramatic.
It is the moment of truth. In the source, they compare this to the older Oracle system, EBSR12. In the old days, you had to compile the flex field.
Compiling? That sounds very programmer heavy.
It is. It's the process where the system takes all those settings you just clicked, the lengths, the labels, the instances, and writes the actual code in the background to make it work. Deploying in the cloud is the same thing. It's freezing your design and activating it.
But it's not instant. The guide has a specific warning here. You cannot proceed until you see that green check mark.
Yeah, this is the coffee break moment. Click deploy, and you wait. You have to watch that progress bar. It goes to 10%, 50%, 80%. You just have to sit there.
And what happens if it fails? The source mentions you might see status messages.
You have to know how to read them. The source says you might see warnings. Warnings are generally okay. It might just be the system saying, hey, this is a very simple structure, are you sure? You can usually ignore those. But errors.
Errors are bad.
If you see errors, you are dead in the water, nothing will work. You have to go back and figure out what you did wrong. But assuming Sarah Connor did her job right.
She gets the green check mark. Deployment complete. So, we have a deployed general ledger, but it's empty, it's a ghost town. We have a company segment, but we haven't told the system company 01 exists.
Correct. We have empty buckets. Now we need to put the water in the buckets.
This brings us to populating the data. The guide outlines two distinct ways to do this, and it presents them almost like a fork in the road. You can do manual entry or you can do import.
And the guide is very specific about when to use which. It all comes down to efficiency.
Right. For company and division, the source suggests manual entry. Why not just import everything?
Think about the volume. How many companies does a typical organization have? 5, 10, maybe 50 if they're huge. In divisions, a few dozen. It takes more time to set up the import than it does to just type them in.
So for those, Sarah goes to the Manage Values screen. She selects the value set like AMD company and hits the big plus icon. She types AO1, description AMD operations, and hits save.
Simple, super simple. Takes 5 minutes.
But then we get to the account segment. The guide changes its tune completely. It says, do not enter any values manually.
Because a chart of accounts isn't 5 items, it's thousands. You have petty cash, inventory, accounts receivable, sales for product A, B, C, salaries, tax, rent. Typing those in one by one would take weeks.
And the risk of a typo is massive.
Oh, huge. Imagine typing 5,000 descriptions without making a single mistake.
So we use method 2, FBDI, file-based data import.
The FBDI, the beast. This is the industrial strength way to get data in.
The process described here is actually quite detailed. First, you have to get the template. You can't just make your own Excel sheet. The guide says you have to download the official XLSM template from the Oracle Enterprise repository.
And specifically, the guide says look for the file related to segment values and hierarchies import. You have to find that exact file.
And here's a detail I loved because it felt so real world. The guide has a specific call-out about Excel security. It basically says your computer is going to hate this file.
Oh yeah. These FBDI templates are packed with macro scripts that run inside Excel. Corporate IT security usually blocks those by default because they can look like viruses.
The instruction is to go to Trust Center, then Macro Settings, and select Enable All Macros. And not just that, but also check Trust Access to the VBA Project Object Model.
Which sounds terrifying if you work in security, but for an Oracle consultant, it's just Tuesday. If you don't check those boxes, the Generate CSV button just won't work. The script will fail.
So Sarah downloads the sheet, fights with security, fills in her thousands of accounts, and generates the zip file. Now she has to upload it. But she doesn't upload it directly to the GL screens. The source lists a specific UCM account.
UCM stands for Universal Content Management. It's basically a cloud holding area, like a Dropbox inside Oracle. And the specific path she needs is Fin General Ledger Import. You have to type that exactly.
It's like a precise drop-off point.
Right. If you drop the file into Fin Payable Import, the general ledger will never see it. It'll just sit there. It has to be the exact right folder.
So she uploads the zip, runs the process called load interface file for import, and hopefully thousands of accounts appear.
Hopefully. You always have to check the log file for rejections.
Yeah.
But if the template was filled out right, yes. Now you have data.
But wait, we aren't quite done. There's one last piece of logic the guide stresses, and it has to do with how these values behave. It's the rules of hierarchy, parents and children.
This is so important for reporting. You can't just treat all values the same.
The source creates a strict distinction. Let's take something like total assets. You can't buy a coffee and charge it to total assets, right?
Exactly. Total assets isn't a real bucket of money. It's a label that sums up cash and inventory. So total assets is what we call a parent.
And the guide lists specific rules for parent values. It says, summary must be yes, but posting and budgeting must be no.
Let's break that down. Posting equals no. That means I cannot post a journal entry to it. The system will block me.
Why is that so crucial?
Because you don't want to double count. If you paste $100 to cash and you also post $100 to total assets, your books are suddenly off. The parent exists only to calculate the total of its children.
So the parent is just a calculator, it just sums up what's below it.
That's it.
And for the child values, the bottom level accounts like petty cash, the rules flip. The guide says summary equals no, posting equals yes, budgeting equals yes.
So the money actually lives in the children, and it all rolls up to the parents for the reports.
That feels like a very elegant system, but it also feels fragile.
It is fragile in the setup phase.
Yeah.
If you get those flags wrong, if you accidentally allow posting to a summary account, your reporting becomes a complete nightmare. You'll be chasing variances for weeks.
It really seems like so much of this is just about preventing future mistakes.
That's what implementation is. It's building guardrails so that when the business starts running at 100 miles an hour, they don't drive off a cliff.
So let's just recap the journey we took. We started with Sarah Connor looking at a blank screen.
We defined our vocabulary, the value sets. We decided how long our words would be.
Then we built the skeleton, the structure, and we mapped our segments to those critical labels like primary balancing and natural account so the system knows what to do.
We created the instance to enforce the required rule, making sure no data gets lost in the ether.
We deployed the flex field, waited for that green check mark, and then we populated the data manually for the shortlists, and we battled the Excel macros for the big one.
And finally, we established the hierarchy rules, making sure parents sum up the data and children hold the actual cash.
When you lay it out like that, it demystifies the whole thing. It's not magic. It's just a series of very specific, logical decisions.
That's the beauty of it. It's rigorous, yes. It's unforgiving if you make a typo, but it's logical. And connecting this to the bigger picture without this setup, the AMD project is just an idea. Once this is done, it's a financial entity. It can transact, it can exist.
It's the difference between a dream and a business.
Exactly.
Now, before we sign off, I want to leave you with a thought. We spent a lot of time on the difference between the structure and the instance. And the source mentioned that multiple instances can share the same structure but have unique trees.
That is a very powerful feature that we just barely scratched the surface of.
So here's my question for you, the listener, to chew on. How might a massive global company use that? Could you have a single global structure blueprint, but then spin up different instances for France, the US, and Japan to handle different local reporting rules without having to rebuild the whole thing every time? It seems like that distinction is the key to scalability.
That is the million-dollar question for system architects. Once you master the instance, you master the globe.
Thank you for diving deep with us today. Hopefully next time you look at an earnings report, you'll see the invisible scaffolding holding it all up.
It was a pleasure. Happy configuring.
See you on the next deep dive.